In the global market, the US dollar price is trending up as investors continue to buy the greenback in the expectation that the Fed will not cut interest rates soon. As of February 16, 2025, the dollar index DXY on the international market reached 104.29 points, up 0.24% over the previous month. In the domestic market, the State Bank of Vietnam SBV's central rate of the Vietnamese dong against the dollar on February 16, 2025, was VNG 23,971. However, the average dollar price on the unofficial market has exceeded VNG 25 since October 2022, and although it has decreased slightly, it is currently still at a high level. Director of HSBC Vietnam's Foreign Exchange, Capital Markets and Securities Services Division, Anh Hung Koa, forecast that the VN-USD exchange rate would be under increasing pressure in the first quarter of 2025. Koa cited two reasons for the greenback strengthening in January. Firstly, the recent positive signals from the U.S. labor market and economy, as well as statements from members of the U.S. Federal Open Market Committee, FOMC, about continuing to act based on actual data, have caused the market to gradually reduce expectations that the FOMC will soon lower policy interest rates. The move has pushed U.S. government bond yields to increase slightly again, which has caused the dollar to regain its strength in the international market. The DXY currently maintains above 104, which is one of reasons currencies in Asia, including the dong, have become weaker against the dollar. Recent gold or foreign currency fevers on the unofficial market are mainly speculative activities. This is not a concern if the SBV continues to control inflation and is not too hasty in lowering deposit interest rates. It will not affect macroeconomic stability, experts said. Vietnam is a communist country. Thus, it has a tightly controlled, centralized economy. Vietnam has also been used as a storefront for communist China. This disguises Chinese products, making them look like Vietnam-made, when in fact, they are only assembled in Vietnam. China deflects criticism, and Vietnam has a booming business in product, assembly, packaging, and shipping. A currency value increase would cause Vietnam and China to lose a huge export advantage. Vietnam has pledged not to deliberately weaken its dong currency to gain an export advantage, reaching an agreement with the U.S. Treasury to refrain from competitive devaluation and make its monetary and exchange rate policies more transparent. The agreement, announced in a joint statement by Treasury Secretary and State Bank of Vietnam Governor Nguyen Thi Hong after a virtual meeting on Monday, follows months of U.S. pressure on Vietnam over its currency practices and ballooning U.S. trade surplus. The U.S. administration, in its final weeks, had declared Vietnam a currency manipulator and had threatened to impose punitive tariffs on imports from Vietnam. Vietnam, which benefited from the shift of U.S. supply chains away from China amid a tariff war, saw its goods trade surplus with the United States jump 25% in 2023 to $69.70 billion, despite the COVID-19 pandemic. Vietnam is a growing source of U.S. imports of furniture, electronics, computers, and apparel. In the joint statement, Vietnam confirmed its commitment under International Monetary Fund rules to avoid manipulating its exchange rate in order to prevent effective balance of payments adjustment or to gain an unfair competitive advantage. and will refrain from any competitive devaluation of the Vietnamese dong. The Vietnamese central bank said the focus of its monetary policy framework is to promote macroeconomic stability and to control inflation. But the central bank agreed to improve exchange rate flexibility over time, allowing the dong to move in line with the development of the country's markets and economic fundamentals, and to further modernize and make more transparent its monetary policy and exchange rate framework. The Treasury said it would inform other U.S. government agencies about the agreement to address U.S. concerns. I believe the State Bank of Vietnam, as attention to these issues over time, not only will address Treasury as concerns, but also will support the further development of Vietnam's financial markets and enhance its macroeconomic and financial resilience, Yellen said in the statement. Well, everyone know dong is one of fastest growing currency in region. Vietnam economy is growing day by day in every field of life. Agricultural, EV vehicle, Vietnam economy is growing. European countries are shown interest to establish the companies in Vietnam. So, in my personal opinion, dong currency are growing next few year. With over 100 billion United States dollars in foreign exchange reserves, the State Bank of Vietnam is ready to intervene if necessary to keep exchange rates steady, its deputy governor said. It could also use monetary policy to manage and stabilize the foreign exchange market, Deputy Governor Đào Minh, too, said at the government meeting on Wednesday. The exchange rate is a crucial macroeconomic indicator, affecting the purchasing power of the Vietnamese currency and other economic policies, he said. Therefore, the State Bank of Vietnam is committed to flexible management to ensure the exchange rate is appropriate. Last month, the central bank mopped up 164.3 trillion Vietnamese dongs, $6.6 billion by issuing treasury bonds to banks to strengthen the dong. It managed to check the dollar's appreciation, he said. However, after the central bank stopped issuing bonds at the beginning of this month, the greenback has shot up in the past few days. On Wednesday, the dollar rose to an unprecedented 25,120 Vietnamese dongs to 25,242 at banks. It is trading on the black market at 25,440 Vietnamese dongs to 25,540. To explain that the recent spike in the dollar's value was because the U.S. has not yet spelled a timeline for cutting interest rates. Thank you for watching. Take care and goodbye.